Early right now at this point in terms of whether or not Mr. Loeb is going to pursue an activist campaign at Sony. He, of course, was there 6+ years ago. It did not end particularly well in terms of at least the attempts at that point where he was trying to get the company to focus on its U.S. assets and monetizing them in some fashion to get to the underlying value. Here we find ourselves yet again in a similar position, at least does Mr. Loeb, where he feels that the net asset value, and again, he did not comment, but according to people who are familiar with his thinking, the net asset value at the company is far above where the stock price is. And there is perhaps an attempt that will be made by Mr. Loeb, who has been buying stock through what I believe is a special purpose vehicle. There may be an attempt to try to influence management to attack that net asset value and try to obviously deliver more value to shareholders. It's not as though Sony has not performed fairly well over the last few years, so the stock's down a bit more recently. Over time, it has been a fairly strong performer, and there is no doubt that there is a great deal of perceived value in its U.S. assets and perhaps even value to other companies, such as a Netflix or an Amazon or any of them out there that are searching so high and low for content to continue to fuel what they need to provide to their direct-to-consumer base with their video products. All that said, though, what I've understood for some time is that there's really not a desire on the part of management in Japan to actually sell in any way the U.S. assets. Is it possible that you could get a partial spin, or is that something Mr. Loeb will push for? Perhaps it will be, but it is still somewhat early days here, so we'll have to wait and see. And again, even though the new Japanese management or new CEO has instituted a buyback, which is a fairly big deal in Japan, changed the leadership at the PlayStation division, nothing says that there's an indication at this point, despite what may be the desires of others to perhaps entertain talks with Sony USA, that there would be any desire on the part of the Japanese to actually pursue even a partial sale for that unit. Contessa?
A buyback is rare, a dividend even more rare in Japan.
Yes.
David, I'm interested in what people are suggesting the TV and film production unit of Sony could be worth, because it's about 11% of revenue, much less of profit, and Sony overall market cap about 60 billion, and yet some people are suggesting it could fetch 30 billion or so. And there seems to be a big gap as to what the numbers are here and what a sale of that division could raise for Sony. What are you hearing?
You know, it's frankly, I haven't talked to anybody about the specific numbers, Wolf. We're not at anywhere near a point at which people are making offers that would actually encompass that. You would imagine, again, given the potential, at least interest in content-producing assets and how it would line up with some others, that there might be a willingness to pay a multiple above what is the current multiple, certainly, and therefore perhaps a value that is above what the market is currently valuing the stock at, or that part of the company, Wilf. But I think a bit early at this point to sort of talk anything about values, given there have been no talks that I'm aware of whatsoever involving this asset specifically.
David, while we have you sitting in front of a camera, it just seems so convenient. There's been all of this excitement surrounding the big unveil of Disney Plus later this week. Disney got an upgrade from Cowen today. What do you think about this stock, this company, and where it's going?
Well, I think this is going to be a very important day, Contessa, without a doubt. On Thursday, we're going to be there covering it. It is a seminal change in the way Disney pursues its business. We've been talking about it for some time, but on Thursday, the investment community is going to get a lot, from what at least I understand, of specifics. It's not going to be similar in some ways to what Apple did a few weeks ago, where they unveiled sort of their plan in streaming, but didn't really give a lot of specifics. This is key to Disney's business. It's key to its future. And the expectation is, at least at this point, you're going to get a lot of the milestones put out there by the company that it expects to achieve in terms of how much it's going to actually spend, in terms of what it would hope for in terms of sub-projections for its direct-to-consumer entertainment and perhaps even its ESPN Plus service. You're also going to hear about Hulu and, from what I understand, perhaps as well, about Star India. That was one of the key international assets that it purchased along with Fox. India does become an important international marketplace for Disney. So this, you could argue, is perhaps one of the more important meetings the company certainly will have ever had as Bob Iger, its CEO, outlines their future. The questions, of course, will continue in terms of what's it going to cost, what's the hit going to be to earnings, at least near term, how big can this service get, where is it going to be priced, how do you manage 3 services in the marketplace, in ESPN Plus, in Disney Plus, and, of course, in Hulu, which they control. So many questions, but no doubt a lot of focus. And you're right, we did get a lot of research today. I took a look at the Moffett-Nathanson numbers just for sort of point of reference. They're looking for as much as $3.8 billion in losses between Hulu and Disney Plus in 2019. And then actually fiscal year 20 really is what that is. And then fiscal year 23, $1.7 billion to $1.8 billion overall. Also look for about 50 million subs at Hulu and about 35.5 million at Disney Plus. I'm not quite sure how they got so specific given we know so little and there's so much to learn, but it's going to be an important day. Back to you.
David, and I guess the biggest question of all is going to be that pricing, and if it's above or below Netflix, I'm sure we'll have a big impact on Netflix's share price on the day as well.
You know, that's a key point. It's sort of not necessarily really exactly where it's priced, although we may learn that, of course, as well, Wilf. But what will the impact over time be? Remember, when we talk about costs for Disney, it's not just the cost of rolling out this service, and we're going to see the app on Thursday as well. It's also the cost of lost licensing fees to the likes of Netflix, which has been using Disney content to satisfy the desires of its subscribers for some time. So Netflix, which we know is already spending, what, 12, perhaps as much as $15 billion in the next calendar year on content, is going to continue to be under pressure to do that. And I think a key question overall will be, as time goes by here, and this is in the marketplace, will Netflix's growth rate slow at all, as there is a full-fledged Disney product that people will be considering as well? Again, also, of course, the price point becoming a very important part of that.
David, awesome. Thanks very much. We look forward to your coverage.